For the first time since the early 90s, we're now seeing share prices above the 5% threshold for gains or losses. Your perspective on the first day of market making?
Well, one thing you've got to think about this is today is the day when the barrier, the 5% barrier was lifted. And yes, you're right. For the first time, we're seeing some stocks break that. But there are not too many stocks. I think it's going to take a while for the fundamentals to kick in and actually let us see stocks that are moving beyond that 5%. There were reasons why it was held at 5% previously, but it's a good sign. And I think one thing that has come out of this is if we had seen a significant rise due to a number of stocks going up at beyond 5%, it probably will not reflect a fundamental and well transparent and traded market. So I think this is a good sign. It's a moderate raise, and it just shows that both the market makers and the traders haven't thrown caution to the wind.
Well,
with the new...
It will take a while for the market to come to grips with it. Clearly, it's still early days. But your perspective on the MPC decision, they've decided to keep rates on hold, as widely expected at 12%. What does this mean for companies listed on the bourse, in your view?
Well, it just makes planning a lot more stable, a lot more clearer. We know what to expect till the end of the year. We're pretty clear what the central bank wants to do. So for those companies listed, yes, credit will still remain tight. They may not be able to do a lot of what they want to do. But recall that November and December are typically months for closing down. So we effectively have barely 6 weeks of active commercial opportunities left this year, and before the winding down starts.
And for the banks in particular, clearly the first half earnings season was very, very good. We saw companies' return on average equity significantly higher than what many had anticipated earlier. So for the banks in particular, I think they are gaining from this to some extent when you look at the rise in bond yields, rather the fall in bond yields, when you look at the historical portfolio of bonds in banks. But your thoughts overall on what this MPC decision means for the banking sector? Well,
yes, you're right. The fall in bond yields, high bond prices, it's a pointer to some of the activity we're having in the capital market itself. But also in terms of banks' books, clearly those high bond prices are taking an effect in terms of the balance sheet of banks. It's going to give it some volume in that wise. But another way to look at it is that with the half year over, banks are going to start consolidating on whatever gains have been made this year. And for any bank that's really looking out in terms of strategy, it's time to start working out what 2013 is going to be like. 90-something days to the end of the year. 2013 is just around the corner at this rate. The indices to the end of the year from the central bank are pretty clear. So it's a matter of coasting along this way. Q4 results will simply reflect the kind of performance you've had from Q1 to Q3.
Okay, and a quick point for me. Your thoughts on the FMCG space in particular. These clearly are the companies that perhaps will be hit the most by any rate decision, either up or down. And clearly, since the rate decision has been not to change anything, your thoughts on that space?
Well, it's not really going to affect them too much. Recall that we've had this rates with us for about 6 months now, since about March this year. For the FMCG companies, they have been hit by whatever slowdowns may have occurred because of the security situation in the north. You did hear the CBN governor refer to the security situation and the food prices. But one thing about FMCGs are that prices are always adjusted to what goes on in the economy. Now, November, December typically are months for high purchases. We've got 2 major religious festivals coming up, both for the Muslims and the Christians, and you're going to have significant purchases at those times. Those who typically will have their goods in high demand at that time will expect to at least reap some degree of revenue before the end of the calendar year, that is.
All right, thank you so much, Boyega, for joining us. We look forward to speaking to you again